What's going on, guys? So this is Thick Teddy here, and I'm just making a short video to kind of go over CCIV and Lucid Motors because I'm getting massive amounts of DMs about people who are long on it, people who were just trading it, people who were swing trading it, people who are short on it, people who saw my tweets about it today. So I'm just going to kind of go over it, what I think about it, what I think about today, what I think about it dipping a lot after hours today, what I think about the valuation, what I think about the agreement, the merger, all that stuff. So Lucid, overall, the company, I love it. The tech, I love it. Their cars, I love it. What they're doing, I love it. Everything. Everything about the company, I love. I would be long in this company if I would have gotten a position under $15. Um, so don't get me wrong, I absolutely love the company. But there are a lot of buts about this. The fact that it was at $60, that was a huge but. I released my not short report because I'm not taking a position. I'm not going to take a short on it, but my kind of bearish report on CCIV when it was up around $58 to $59, and I think it's at 40 or below 40 now after hours. So basically, overall, they have great growth expectations. They're starting production and delivery of vehicles in 2021, which is great. They have, like I said earlier, great tech, amazing looking cars, high prices on their cars, but also a lot of pre-orders on their cars, so they're already selling. But here are the buts. We're going to start. We're going to get into these buts. The fat buts. Okay, so Tesla. We all know about Tesla. We all know how it's a cult stock, and we all know how it has a crazy high valuation. As of right now, it is 21 times its 2020 revenue. So I think Tesla's market cap is somewhere above 600 billion, and their revenue is 32 billion for 2020. So it's like 21 times its 2020 revenue, and it's 11 times its 2021 expected revenue. So that's still pretty high. And that's all at Tesla's current price at the moment. So still pretty high. It's valued quite a bit over its revenue, which, I mean, it's Tesla. What can you say? They have some things that are going to be huge in the future, so it's kind of expected. It's kind of a cult stock. So yeah, whatever you got to think about that, you can think about that. But they're the industry leader. They kind of get to set that edge for what the sector's valuation benchmarks are going to be. But this CCIV Lucid merger is looking to be right around 90 billion overall valuation. We were thinking it could be 95 to 100 billion, but I think it's around 90 billion overall. And so basically, that means that Lucid Motors would be trading 250 times its 2020 revenue, which the revenue was right around 400 million, a little less, like 380, I believe. So we are talking pre-sales. So you can argue Lucid Motors, they haven't had a lot of sales yet. They haven't had a lot of this. They're not producing a lot of cars yet. So you can argue that, but we are talking just straight fundamental facts right now. The company that you are buying at this moment only has 380 million in revenue in 2020. And in 2021, when they begin selling cars, so now we're getting into them producing and them selling cars, they're only at 900 million, which 900 million is a big number, but compared to their valuation of 90 billion, that's not what we're looking for. That's 100 times their revenue. 100 times revenue to valuation ratio, when Tesla is going to be 11 times. So if you're telling me that Lucid has a higher ratio than Tesla, I'm not buying it. I'm not buying it 100%. I'm not buying it at all. I'm not even thinking about buying that. I mean, we can get further down the line. CCIV full production of cars down the line, then they'll be going after it. They'll be hitting billions and billions in revenue, which that'll be great. But also, we're years away from that. People are not short-term buying a stock right now for what it's going to be doing in 5 years. That's called investing. And if you're not wanting to invest, if you're looking for a trade, if you're looking for a swing trade, which is what I do, and which is what a lot of the people that follow me and are into my content do, then CCIV is overvalued in my opinion. So if CCIV wanted to kind of compete with Tesla's revenue to valuation ratio, then CCIV would need to have, I believe, 5 billion in revenue. Let me see here. I got my notes pulled up. They would need 9 billion in revenue in 2021 for them to match Tesla's ratio, which they're not going to do anything near that. Like I said, they're doing 900 million instead of 9 billion, which is what they need. So CCIV, they're a great company, but people are ahead of the curve in assuming what has not been inked yet, and what has not been produced, and what has not sold yet. If you remember back, Nikola had a lot of things that they were saying, and then a lot of things did not pan out like they said. I'm not saying CCIV or Lucid Motors is that, but I am saying that until you see inked deals, until you see produced cars, until you see sold cars, and you can kind of trust them a little more, like on a Tesla basis, we can trust when Tesla says, I think we're going to sell this many cars next year, because they have sold cars, because they've sold thousands and thousands of cars, to when they say we're going to grow by 20%, then we go, okay, that makes 100% sense, because Tesla probably is. And so in the end, I just really don't think that it deserves to be valued at a ratio that is 10 times higher than Tesla's expected revenue to valuation. I just really do not see it. And yes, people are going to argue with me that it's before production, before sales, before this and before that. And that's the whole reason why I'm not buying it, is because it is before that, and I kind of want to see a little bit of it before I'm willing to step in and put my money on the line for it. And we can also compare it to Hylion, however you want to say it, but Hylion had a really similar run to CCIV. They shot all the way up to $55, and then people realized, wow, they're not going to have the revenue that we want for 2 or 3, 4 or 5 years. We're 5 years out from them being valued fairly at this $54 market cap, and it dumped all the way down to 15 within weeks, and within a month it was down to 15. Now it's back up to 18, but people will realize that companies are pushing their valuation limits, especially when they're as far above the sector valuations benchmark as CCIV or Lucid Motors is. They're too far ahead of Tesla's valuation for it to be plausible. And you can kind of sum this all into one statement: is Lucid Motors negotiated their valuation at the merger. And they had analysts, they had financial experts deciding their valuation. And they agreed upon a valuation of right below 12 billion. So you're buying a company that has been valued by extremely smart financial experts at $12 billion, and you're buying it at, what is it at now? Somewhere around 70, 80, 90, whatever it is, fluctuating throughout the last few days. But I'm a firm believer in buying things when they're undervalued, this and that. But I can see the upside to buying a Lucid Motors type of company when it's, say, like 2 times what. So say it was $24 and it's sitting at like a valuation of 25 billion. Then you can kind of think about it and you're like, okay, well, in a few years it's going to be really close to that, and then we're going to be like locking in contracts and stuff. So I can see that, but right now I just do not see the value in it at wherever 60, 70, $80 billion valuation. Just talking about all the numbers I talked about with Tesla earlier, I just don't see it being comparable. So I just wanted to get this video out there, explain myself to everyone. So I hope you guys enjoyed. I hope you guys don't lose any money on CCIV. I hope you guys make money on CCIV. I hope CCIV goes to 200 for you guys. I'm just giving you my opinion. I'll be happy if I'm wrong for you guys, but just wanted to try to protect you guys the best I can. So thank you for tuning in.